And in this episode of the Happy Hustle Podcast, we have my friend, Mr. Sean Pfalzgraf, who is the CEO and founder of BluePeak Financial. He's a CPA, accountant, and serial entrepreneur. And he is talking to us all about crypto taxes 101. These are the things that you need to know if you are investing in crypto. We're going to be diving into this episode of the Happy Hustle Podcast. Do you want blissful balance in your personal and professional life? Great. What's up, guys? My name is Kerry Jack, and I want to help you happy hustle a life you love, one full of passion, purpose, and positive impact. I'm a lifestyle entrepreneur, a professional model / actor, a digital marketing specialist, a podcast host, author, a biohacker, an eco-warrior, a martial artist, a hippie cowboy, and a humanitarian. My goal is to educate, inspire, and entertain you to live a life of passion, purpose, and positive impact. It is time to happy hustle your dream reality. Yee-yee. All right, Mr. Sean Pfalzgraf, welcome back to the Happy Hustle Podcast, my brother. I am super stoked to rock the mic with you.
Heck yeah, thanks for having me, Kerry.
Yeah, man. I mean, I got to say, you are a happy hustler. You are my accountant and CPA. You're the founder of BluePeak Financial. And we're talking all about crypto taxes 101 today, because this is something that is very interesting. Some of these new rules and regulations that are coming out and can actually positively benefit you if you adhere to them properly, and negatively hurt you if you don't. And so this is a topic, Sean comes on typically once a month on the Happy Hustle Podcast, and we want to just be educating ourselves and really making sure that we're being proactive with our taxes and our strategies around them. And crypto is always a hot topic. And so this is something, that Sean and I are diving into with my own crypto assets, and something I thought, that would be really powerful for the happy hustlers. And Sean put together, some very important crypto taxes, 101 type-esque statements that we're going to dive into. So first and foremost, Sean, just introduce yourself real quick. And for those people who haven't heard you on the show before, just tell them a little bit about BluePeak Financial.
Yes, so Sean, with BluePeak Financial, we provide proactive tax planning and preparation services. And we outsource the accounting, the payroll, the bookkeeping, so that you can focus on what you love to do. And we take all the rest, and then we help keep you compliant with the IRS. And so today, definitely focus more on the compliance and then understanding a bit of the intricacies of cryptocurrency and how you can be better prepared this year for your crypto taxes if you've engaged in that kind of activity this year.
Yeah. And just to be clear, you said we outsource, but you're talking about the entrepreneur. You are their outsourced arm for accounting, tax strategy, crypto taxes, et cetera. That's right. Correct? Yeah. So just...
Yep. The whole finance pillar of an organization. Yep.
Exactly. So if you guys are out there and you don't want to hire like in-house CPA or, a bookkeeper or whatever, that's where BluePeak comes in, and they know how to talk shop with entrepreneurs, because they are entrepreneurs. Sean is in the game, and it's important that they can speak that language and also, help navigate your tax burden, be proactive with your finances, do quarterly, monthly, annual reviews. This is something that has been really helpful for me, and something, that I highly recommend. So anyway, let's get into the crypto taxes 101. Where do we start?
All right. Well, I'd like to start a little bit about talking what is a blockchain, what is virtual currency. And I'm going to kind of put this into my own words. But a blockchain ultimately is a database. It's a protocol that lives and breathes through different nodes. And so all that really means is it's a store of a record. And these records are verified and validated on what's called a blockchain. And so ultimately this is important because it tells everybody who's on the blockchain can see and know that a transaction has happened. And this is a way that you can exchange value across borders without any intermediaries or anything in between. So somebody in, say, Europe, you can send, or to Africa, you can send money without any friction Whereas in the current financial system, you have things like Western Union, they take their fees. Everybody takes a piece of the pie before it even gets to where it needs to go. So ultimately, the technology and the protocol is what makes blockchain valuable, and it's really kind of a very special thing that's happening, and innovations happening around it, which is also why there's a lot of speculation and there's a lot of people buying and interested in cryptocurrencies as potential investments, and it's driven a lot of interest. And so the other side of the coin is the IRS, and how are those things taxed, and what constitutes a taxable event in the eyes of the IRS, so that you're making sure that you're staying compliant with those regulations that you have to pay taxes on. So one of the reasons that prompted kind of wanting to talk about cryptocurrencies is there's some new IRS letters that are coming out in the mail. They've just recently started. The letters are basically saying, hey, we've noticed that you've engaged in cryptocurrency activity, but you didn't report it on your tax return. So if you get a letter in the mail, this is what's called a soft letter from the IRS. It's not notifying you that there's an examination, but it's notifying you that there may be an issue with your taxes. So when you get the letter, just understand that it's not an emergency or a thing to react to. It's just an understanding that, okay, I need to double check and make sure that I reported everything correctly on my taxes. So just be aware that it is happening. The IRS has boosted up their funding of new IRS agents, and this is an area that they're heavily focused on over the coming months and years. So just be prepared and be aware that this is out there. Okay. And then next, I think we'll go ahead and jump into how are cryptocurrencies taxed, and what constitutes a taxable event for a crypto.
Yeah. And before you do, I just want to mention, it's still kind of like the Wild West out there with crypto, right? I mean, it's getting more regulated, but like there's a lot of, you see what's happened with like FTX and this guy, Sam Bankman-Fried or whatever, like, there's a lot of fraud going on. There's complete platforms like Binance, I think, completely shut down. Like there's a lot of things happening that the IRS and the government, really the United States government, and global governments around the world are really trying to figure out how to regulate this industry. And you just want to be on the side of ethical business practices always. As a happy hustler, we always do. And that's why Sean is here to talk to us about like how, you might not even know you're doing anything wrong, but that's why it's important to be proactive, not reactive, So I just think it's important. Go ahead, give the disclaimer just before you dive into the next section too, just so people know where we're at.
Right. Yeah. So this information, it's informational only. I'm not providing any sort of legal or expert tax, investment, financial advice on the podcast. This is purely just educational. So great. And I do think that it's an important point. Regulation is very unclear. It's the very little guidance has been provided from the IRS, and we're finding out through legal actions against people what the regulations are. So just apply your best, your due diligence, and really try to report what you think is right instead of being afraid of every little thing. Just proceed with caution.
Yeah, great point.
And so,
no, go ahead. Let's get into it
a little bit. Yeah. All right. So there's really two ways that you can be taxed on stocks or cryptocurrencies. They're all kind of similar in the bucket of you have either operating income or capital gains. And the first thing I want to touch on is operating income. And there can be a lot of forms of operating income, but in exchange for a good or service. So a lot of we're seeing in the crypto industry are people working for crypto companies potentially, and they're receiving maybe cash or maybe a native token of whatever project they're working on. And so it's important to understand that this is considered income to you and should be reported at the fair market value of that token at the time that you received it. And that's very important, because as the cryptocurrency market has declined, it doesn't mean that you didn't receive X amount for the services exchanged. So you need to make sure that you're aware of what you received for any services or goods that were provided. And then also things like staking. So if you're staking on let's say like a decentralized exchange, and you're receiving tokens as interest payments, it's whatever the value of that token was at the time that you received it. And so same with mining as well. So these are active investments. You're generating an operating income, and these will typically go on what's called a Schedule C, or an other income on your taxes. So it's important to just be aware of what operating income is and what constitutes that. And the second is your capital gains tax. Now, this is what most people are familiar with when you talk stocks, or, for example, a sale of a home. You might have a capital gain on that sale. So how to calculate your capital gain. Now, let's say, Carrie, you bought Ethereum at $100. Maybe you put it in $100 about 6 months ago, and the price of Ethereum increased to $200, and you sold the Ethereum in order to buy some Bitcoin. And that action of selling your Ethereum for the Bitcoin is what's called a taxable event. You exchanged that asset, which was Ethereum, to buy Bitcoin. And so you have a $100 taxable gain. Now, it doesn't matter now if, for example, Bitcoin is worth $50 or Ethereum is worth $50. It's at the time of the transaction, because you engaged in an action that caused what we call a taxable gain. And vice versa, you can have a taxable loss, which would be the opposite, right? The cryptocurrency goes down, maybe the market's been plummeting, and you decided to sell your cryptocurrency and you took a loss. So that is, ultimately what you're trying to do is calculate your cost basis, which is the amount that you put in or purchased the asset at versus the amount that you sold it at. And that's what constitutes a capital gain or a capital loss.
Okay, so let me just recap it too, just before we go too deep, because I want to make sure people aren't just like getting, glossy, eyes and going in one ear and out the other. Okay, so you started out talking about like what are cryptocurrencies, being taxed as, and first and foremost, what are the taxable events, right? Operating income, guys, you could think about mining, staking, exchanges of goods and services. It goes on Schedule C, right? And then the capital gains, if you are making money, you have to pay taxes on that gain, and it goes on a Schedule D. Also, if you lose money, you can use that against your taxable income. Is that correct?
Correct. If you have losses, you can use it against your gains. You cannot reduce your taxes from the losses, but losses are credited against gains if you had them both, and you would net them out. But that's a good recap. Yep.
Okay. All right. Continue.
I think another important determination here is whether it was a short-term or a long-term capital gain. Short-term being anything less than a year, long-term being anything greater than a year. And so the main differentiation of why you need to know this is short-term is taxed at your ordinary rate. So the baseline rate at which all of your income is taxed at will be taxed for short-term capital gains, as opposed to long-term is actually taxed at a lower tax rate. Dependent upon your taxable income, it can be different, but it's around a 15% tax rate for most people.
Whoa. Apologies for interrupting your programming, but I got to tell you about something I'm super excited about. This is something very unique that we do at The Happy Hustle, and that is the Montana Mastermind Epic Adventures. See, you can listen to podcasts, watch YouTube videos, read books, acquire all this knowledge, but I believe the best way to achieve ultimate success and fulfillment is to actually align yourself and connect with like-minded, badass, high-performing, heart-centered humans. And that's why it's important to go to masterminds. Now, whether you go to the Happy Hustle masterminds or you go to other ones, that's on you. But I got to tell you about the one that we're doing upcoming in March, the 22nd through the 26th, which is going to be sweet, especially if you love snowboarding and skiing. If you're a high-performing male entrepreneur who's making over six figures, who wants to network with a rock star group of just badass world-class happy hustlers while shredding some pow, this may be for you. We have an amazing mountain mansion which you could ski right into. We got a professional chef cooking up some delicious healthy meals. We're going to be doing masterminds where we share wins and challenges and adversities and just how to overcome them. We're going to be soaking our bodies at natural thermal hot springs. We're going to be enjoying some super cool activities like ice fishing and hiking and campfires and other awesome stuff. And we're going to be digitally detoxing from our devices. That's most important. So if you're interested, hurry up and apply because there's truly only a couple spots. This isn't like a tactic. We only have a couple spots left based on the number of beds in the mansion. So if you want in, you can go to thehappyhustle.com/mastermind. Okay. Now, and if you don't like skiing and snowboarding, no worries. We do have some amazing epic camping adventures coming up this summer. So check them out. If you like camping in the backcountry wilderness, if you want to learn primitive survival skills and fly fish and, dip in cold plunge, amazing alpine lakes and just hike up these remote mountain trails and really just connect with Pachamama, our beautiful planet. We do have these summer trips coming up too, which are filling up fast. So that's it. Let's get back to this episode, but I just wanted to let you know you can go to thehappyhustle.com/mastermind to apply today. All right, let's get back into it.
So by identifying that, it's going to help you kind of understand what your tax liability is at the end of the year.
Okay. So it's, and just to again mention like a little recap. So short-term versus long-term, it matters. Right. There's a difference in tax rate, the percentage based on how long you're holding the cryptocurrency, right? Is that correct?
Yeah.
Okay.
That's right.
All right. Yep. Hey, see, this is just as much for me as it is for all the happy hustlers out there. Okay, guys? Go ahead, man.
Yeah. And it is worth saying that this is, not simple. It can get complicated, especially if you have a lot of different crypto activities. So next, I kind of like to walk through a couple things that you can do to help you get a better understanding of all of these items, or at least put them and organize them in a way that may help a tax professional down the road, which will end up saving you money in the long run. Mm-hmm. So one of the first things that you can do as somebody looking to prepare their taxes for this year is you want to identify all the points at which you exchanged cryptocurrency. So there's four main exchanges or places that your crypto could be located, and these are the things you want to identify. So first is your centralized exchanges. This is your FTX that collapsed. This is your Coinbase, your Binance, Robinhood, Kraken, KuCoin, all of the active centralized trading exchanges. So you want to identify those, make a list of all the ones that you've used. And that's a good starting point. The next, a little bit more complicated, but a decentralized exchange. So this would be anything like your Pancake Swap, your Uniswap, your Tiny Man. And ultimately what this is an exchange within Ethereum. So if you buy Ethereum or any other cryptocurrency, they have decentralized exchanges on. If you swap out your Ethereum for Pancake token or whatever your transaction is, you can do that on a decentralized exchange. So just identifying where those exchanges are onto that list is going to be important. And then the next is your storage wallets. So you can have a hot storage wallet, which might be your Coinbase wallet, your MetaMask wallet, Exodus wallet, your Algo wallet. This is anything that's kind of a web browser based wallet. And then lastly is your cold storage wallets. So that's your Ledger, your Trezos. Yep.
I got one right here, guys, that I never used, but I do have one.
I I tried to tell Carrie to keep your crypto on a cold storage wallet, but we'll get there eventually.
Yeah,
We'll get
guys,
there.
listen, I'm not. I have crypto um, in a hot wallet storage, which is online, and I have this damn ledger, and I just which is a cold storage wallet. I just haven't moved my crypto over yet, which is definitely not wise, not recommended. That's why, again, I'm learning, going through this just as much. Sean is, someone who I look to for a lot of advice in this realm. I know you have, substantial amounts of money in crypto, over six figures, right? Invested. So you don't want to keep that on a platform, right? That could potentially be hacked. That's why it's important to have cold storage wallets and really making sure that you are protecting your assets, right? So sorry, I just had to say that.
Yeah. No, and that's one of the beautiful things about cryptocurrency is the concept of self-custody, which is currently not really known in the traditional monetary system. You keep your money at a bank, right? And the bank takes that money and they lend it out to other people, and they're constantly lending on your own money. Cryptocurrency allows the ability of self-sovereign custody of your own assets, which is another kind of revelation of crypto.
Yep.
But kind of going back into making that list. And this list is critically important because these are all the areas that you could have had taxable activities occur. So knowing those as a baseline will be hugely important in kind of performing the other steps. And so you start with this list, and then I'd like to recommend a couple different crypto softwares. I say kind of from this point, let's get it into a system, let's get it into a software and see what we can do with it. So one that I've used and I like is called Zenledger. Very powerful tool. They link up to most crypto wallets and exchanges. So go ahead and give Zenledger a try, or Coinly, TaxBit. Coinly is another one. TaxBit is another one. Those are also good crypto tax softwares that you can use. And there's subscription models, and you just kind of download it, and then you'll link up your exchanges, your wallets to this tax software. So assuming that you're all linked up, all your activities flown in, I think a lot of people, especially if you have more complicated tax activity, might see some numbers that don't make sense. Maybe you're like, I didn't make $1 million this year. This is telling me I owe, $100,000 in taxes. Well, chances are the tax software has done its best job possible, but there's issues. So with anything, there's always an exception to, and the best thing that you can do in this type of situation is try to identify, kind of go through the tax software and just see where something might look off. And you don't necessarily have to fix it at this point. If you had, complicated crypto activity, just try to identify where you think something might have gone wrong. And this might be a challenging task and not so straightforward. Every person's going to have a different situation, but this may help you in the future if you need to go to a tax professional. Because ultimately, what I want for you is to have a basic understanding of how to get organized with this stuff, so that if you do need to go to a tax professional, you can give them all this information as well as where you think things went wrong. And that might save you 15 hours of billable work from a tax CPA, which can be quite costly. So ultimately, you're trying to isolate where did something go wrong, or what might I be missing in the software that I would need to get additional help from.
Awesome.
Does that kind of make sense how I explain that?
Yeah, it does. I mean, basically, guys, use this crypto tax software. He recommended Zenledger, but there might be some issues. You can manually aggregate any activity that might not be linked to the software, upload it, and then you can reconcile any differences. Again, this software is there to help you, but that's why it's important to have experts who are giving, a second eye on this stuff, and really people like Sean with BluePeak Financial to, really help you understand crypto taxes and also be proactive and not just relying on, the software to understand your crypto activity, because it is complex, right? There's a lot going on. There's a lot of different, you mentioned like Pancake Swap and Kraken and all these crazy names. Yeah. It's like, I don't know what the hell's going on with crypto, but there's just like all these crazy names. I think if you're going to get deep in the game, even if you just got one foot in the game, you need to make sure you're thinking about the tax component of it. And that's why, Sean's here talking about it. So bring us home, Sean. What's going on? What's the call to action? And, also talk to us about, like, maybe people do want to go a little deeper with BluePeak, and maybe they do want to talk directly with you. Is that something you even offer? Yeah. I mean, could you maybe, tell us what the best place for people to contact you as well?
Yeah. So with the steps above, ultimately, I want to give you the tools and the know-how to either do your own crypto taxes if they're simple, or if you know what Uniswap is and Pancake Swap, maybe you've been doing a lot of crypto activity and you might need some professional help. And so if you take these steps, kind of get aggregated on things and bring that to a tax professional like myself or anybody else, that would at least, hopefully save you some time and energy. And so, one of my favorite things to do is to work with crypto savvy professionals or people looking for their taxes done with crypto, because it's an area that I specialize in and I do have a passion for. And so if you're looking for help with your crypto taxes, please come to me, book a consultation. Be happy to just kind of sit down and talk with you and get an understanding of where you're at. My website is www.BluePeak Financial. That's blue is the color, peakfinancial.com. You can book a consultation there, and I'd love to chat with you about crypto or anything else, tax related. It doesn't have to be crypto. I offer tax preparation, planning services, outsourced accounting. So I'd love to kind of get on a call with you.
Yeah. And again, guys, like, it's important, if you're not going to spend the 10,000 hours in this department, to find someone who has, like, that's what they say. In order to become an expert in anything, it's going to take about 10,000 hours. Sean spent the time. He knows this game. Sean worked at a big three, right? CPA tax firm before, then a Fortune 100 company running, agile project management and taxes. And he's an expert in this industry. It's like, you got to hire smart people to be proactive with your taxes, both, for your business, your personal life, and your crypto. So anyway, BluePeakFinancial.com. We'll link it up the show notes. This has been very informative. Definitely gave me a little kick in the old rear end for my own crypto, and to, do some things, we'll probably talk about, offline. But anyway, man, this has been great. Any final call to action, just regarding crypto and parting words of wisdom for the happy hustlers out there?
Yeah, I think ultimately, try to do it yourself. Hopefully that saves you money in the long run. If you need help, come to BluePeakFinancial.com. We're happy to help. And thanks for having me.
Yeah, man, this has been awesome. All right, y'all, we are out. Check out Sean's website, BluePeakFinancial.com, and get your crypto taxes in order and start happy hustling a life that you love. All right, we are out. Peace, y'all.